Military action in Iran? What is going on with the market today? Blake, let's talk about it.
Hello, this is Blake Anderson, Certified Financial Planner.
And I'm Adam Anderson, owner and founder of WealthGuard Advisors. Thank you for listening. Today, we're going to talk about the reaction to the market to the conflict in Iran and what that means for you and your money.
Yeah, I think it's telling that the market ended positive for the day. We did open down, which is normal when we have big political news like this. Markets tend to be down. And I think it's also telling that the market was only down not even 1% at the lows. And so it's pretty positive when something like, massive military actions in the Middle East and all the effects that has on oil and global shipping with the Strait of Hormuz, and we were only down a little bit and then ended positive. I think it's a pretty strong sign that we'll be working our way through this.
So I thought it was interesting. Over the weekend, we get the panickers selling, and then as soon as the market opens, which opened way down, then it starts to move up all the way through the day, and it almost closed pretty close to its high. So we looked at typical S&P 500 performance after major conflicts since World War II. And really, since the Korean War, 1950, we had a positive market within the year. The Cuban Missile Crisis, sharp drop, then recovered quickly. The Gulf War, a 10% drop initially, and then gained 20% within the year. After 9/11, we had an initial 11% drop and recovered within months. Remember, that was in September, and I think we ended up the year positive. The Iraq War, we had some short-term weakness and a 20% gain over the next year. And the Russia-Ukraine invasion, we had an initial 7% drop, but recovered over the following year. So I saw another one that listed all these other events that have taken place. And the statistics is that within 1 year, we're 73% of the time after a geopolitical shock, we are up. So should we be panicking today? I don't think so. What is it that what we should be worried about with this, Blake? What do you think?
The concerns really come into continued escalation, or we see that the fighting drags on. The big concerns would be oil, the availability for energy. It looks like, especially energy in the United States, we use a lot of natural gas, which we're currently a net exporter of. So I don't see it being too big a concern right now, but watching that. And then the other big concern would be shipping. There's lots of international shipping passing through the area there. And if we do see restrictions on that, I was reading a report about, if insurance says, hey, we won't cover you if you pass your ships through these straits and these war areas. So those would be the other big concern.
Right. So because the Strait of Hormuz, about 20% of the world's oil passes through there. Right now, zero is passing through there. So there's definitely that volatility. So we saw U.S. oil spike almost 6% today, which means that we might see in the short term higher gas prices, higher fuel costs in relation to this. The destabilizing of Iran, which right now creates volatility, ultimately is going to create more stability for the region. And I think that's what people are looking at. So all their neighbors, Israel, Saudi Arabia, Qatar, however you like to say it, they're all going to be more stable. We're not going to have Houthis and other terrorist organizations causing problems in that region. That's going to be stabilizing for Dubai and these Abu Dhabi, these big industry centers. So ultimately, a more stable Middle East is a more prosperous world. And I think that's why the market is rallying today. In the short term, yes, oil is up. Is that inflationary? Yes, it is. But this should be a short-lived conflict, hopefully, God willing. And then we will see probably oil access to Iranian oil to the general markets to help stabilize their country. And we could see actually lower oil prices in the future. So let's just watch and see what happens there. But as of today, the markets are reacting positively and oil is going up, which is inflationary. But that also means that the Fed is more likely to lower interest rates. Probably another reason why we're rallying today. So some interesting things. I want to talk about some interesting trends regarding the Magnificent Seven, those tech stocks that everyone talks about all the time, and household names like Walmart and Costco. I saw this about consumer staples versus the Magnificent Seven. And let's look at this. Right now, the price to earnings ratio, which is the price of the stock relative to their earnings, their ratio, is really how we put a value on on a company. Right now, Apple is trading at 32 times earnings. Google's 26, almost 27 times earnings. Amazon, almost 27 times earnings. Microsoft, 24 and a half times earnings. NVIDIA, the AI chip makers, 22 times 7 earnings. Meta, which is Facebook and Instagram, 22 times earnings. Costco is 48.6. So we saw this rotation away from these tech companies and into consumer staples like Costco, Walmart, and Coca-Cola, Procter & Gamble, Philip Morris, Johnson & Johnson's, Pepsi. And look at this. Now their multiples are so much higher. 48 times. That's more than double almost all of these, excluding Tesla, which is still out of the stratosphere. They're so expensive, but people still love it. So Walmart, 42 times. So these are very expensive relative to the market, where NVIDIA, these other companies, are very cheap to the market. So my feeling is that the rotation maybe is played out, and maybe the rotation will shift the other way. So we'll see what happens there. Would like to share any thoughts on that one, Blake?
Yeah, I think today was kind of a signal that we might be, ending that rotation from growth and tech to consumer type businesses, more defensive businesses. A lot of these tech names were up pretty strongly today. And I think it's telling that these earnings ratio, PE ratios have gotten so disparate. When you think, would I rather have a company like NVIDIA that can't possibly meet their demand, or would I rather have Costco for twice the relative price? And Costco, while a very good company, is not growing at the pace that NVIDIA is.
Not 48 times their earnings, I don't think. So I did bring up the XLK, which is the tech index from State Street Bank. And so one of the indications that I like to look at, this is the 200-day, this is the 20-day moving average. It's an average of the last 20 days price. And it's been moving down sideways for quite a few months now. Each one of these red marks is a month. So it was that 1, 2, 3, 4 months. And it's coming down. And right now it's sitting right at that 200-day, which often is kind of a barrier to support the stock at that level. So we're right at that level, and it bounced off of it today, which to me is maybe not the telltale sign, but it's a very good sign that this may be at a bottom. So pretty close. Let's take a longer chart and look at that 200-day and what it's done in the past. So the 5-year, obviously this has come, way down, way down, way down. So it's still up here in this level, but it's still, I think, could be hitting a support level here. This 135 for the XLK. So we'll see what happens with that. But, something to be mindful of. I think it's still, people have been overweighted in technology. It is good to be diversified in different things.
WealthGuard Advisors, just a reminder, we are a registered investment advisory firm, and part of that is a fiduciary responsibility to our clients. I mean, we're committed to putting our clients' best interest first. Our team specializes in personalized asset management and financial planning designed around your unique goals. If that's something that interests you, we work on a straightforward fee-only basis, no setup fees, no exit fees, just transparent pricing for the services we provide. And if you'd like more information or just would like to pick our brains and talk with us, we'd love the opportunity to sit down and meet with you. Thanks so much for watching. We'll see you next time.
Thank you. Bye.